Hi there, hope you're doing great today. How do you avoid making a bad investment decision or buying a bad property? It's a question we struggled ourselves with in the beginning stages of our journey. But today I wanted to share five key steps that you can take, or five key steps that have been at least helpful for me as an investor to make sure I make sound investment decisions. As usual, our videos are for educational and entertainment purposes only and do not constitute tax, legal, or investment advice. So let's begin. Step number one is being very clear on your investment goals and investment criteria. Are you looking to invest for cash flow mostly, appreciation, tax mitigation? Usually it's a combination of the above, but it's important to prioritize those investment criteria. What asset class are you looking to invest in? In the beginning, it's important to be hyper focused. Down the road, of course, it's always great to diversify. You don't want to have all your eggs in one basket, but selecting an asset class, and even within that asset class, for example, say you select multifamily, being very clear on the subclass that you want to invest in. Are you going to be after new construction and development, which is typically more of an equity play or an appreciation play, or if you're a cash flow investor, perhaps looking at stable value add multifamily, maybe another path to take. Are you looking at class A, class B, or class C properties? Are you looking at specific markets and sub-markets? Having that clarity up front will help you avoid what's known as the shiny object syndrome, because especially once you start getting into the circles of real estate investments, getting on all these various lists, you will be literally bombarded with information. So it's helpful to keep clarity in order to stay focused, especially as you're getting started, but even down the road. Number two is know and understand the market. We'd like to say that you can do a lot of things to a property, but you cannot lift it and shift it across the country to a different market. So being very comfortable with the market and sub-market. And as a passive investor, you may not necessarily have that deep knowledge of the local market, especially if you're investing out of state. But there are a ton of free resources you can lean on to double check the information presented to you by the sponsors, as well as talking to family, friends, people that you know who are in those local markets and can give you that independent third party view. Number three is knowing and vetting the sponsor team. You may have heard the phrase, it's the jockey and not the horse who wins the race. They usually go hand in hand together, but having the right sponsor team is key. Sponsors who have syndicators, operators, that's another word you may hear used in that capacity. Basically, you want to make sure that the people leading the deal have experience in that asset class, in that market, executing on that business model, understanding how they communicate. And we have a ton of articles and videos on how to vet sponsors. Number four is understanding who the extended team is. Multifamily and frankly commercial real estate is a team sport. At the end of the day, when you're working with large commercial buildings, it's effectively like running a business. Each building is its own business, and it's a team sport. You cannot do that alone, and nor can the management team do that alone. So they lean on a property manager, attorney, lender, insurance broker, contractors, and so forth. So you want to understand who these people are and how what their level of expertise is, specifically, for example, with the property management firm, because it's important to ensure there is alignment of experiences and objectives there. And number five, which is last but not least, is understanding the financing terms, whether or not those align well with the intended business plan, and really digging into the numbers, understanding the assumptions used to arrive at the returns being presented to you, because the devil's always in the details. And one of my mentors likes to say, numbers don't lie, but I can make them look anything that I want them to look like. So it's important to deep look under the hood, and we have a course to help with that exercise in terms of quickly and efficiently being able to vet deals. So if you're interested in learning more, feel free to connect via one of the links below in this video. So we hope you found today's video helpful, and if you did, please like, share, and subscribe, and we'll see you at the next one.